As a doctor, I've watched surgical technology evolve rapidly, and few companies have been as revolutionary as Intuitive Surgical. Their Da Vinci robots are performing thousands of procedures every day around the world, but while the tech is cutting edge, is the stock still a smart buy? In this video, I'll walk you through exactly what ISRG does, break down its fundamentals and financials, look at the risk, and share my personal verdict as both a medical professional and an investor. Is it time to buy, hold, or pass? Let's find out. Welcome to the channel, friends. In today's video, I'm going to be covering Intuitive Surgical, one of the robotic-assisted surgical companies out there. So sit back and enjoy. So what is Intuitive Surgical? Intuitive Surgical is one of the medical equipment companies, and they develop and manufacture products that enable doctors to perform minimally invasive surgeries in the US and internationally. They have a few different products available, so their flagship product is something called the Da Vinci device. They've also got the Hub, and they've also got the Ion device, and I'll be covering these in this video. I think it makes sense to talk about why robotic surgery or minimally invasive surgery is a big thing and why it's important. The reason we care about this is because doing minimally invasive surgeries, number one, is better for the patient because they have a smaller scar at the end of the surgery, and it's also better for them because they have quicker recovery times. So generally speaking, when someone's had minimally invasive surgeries, they're usually out of the hospital the same day or even the next day, which is really good because if they've had an open surgery done, then they usually would have to stay for around a week or so. So that's the first advantage. Second advantage is they have less blood loss from the surgery. Because it's not as invasive, they're not having to cut through as many structures compared to open surgery. The amount of blood that you'll be losing is much less. And the third reason is because the patient experiences less pain through minimally invasive surgery. And that's why most hospitals, they're moving away from doing bigger open surgeries. However, when there is an emergency, sometimes a major surgery where it's open can't be avoided and it has to be done. In situations where things are less urgent or things can be done minimally invasively, that will always be the first choice. And when it comes to minimally invasive surgery, usually something called laparoscopic surgery is what's usually done. And this is where essentially ports are made in the patient's, for example, abdomen, and things such as this is fed through by the surgeon, and operation is done where there's a camera inside and they can see what's being done. And now Intuitive Surgical, they take things to the next level where they make devices where the surgeon doesn't even have to touch these equipment. They do everything behind a mask, behind a screen, and they control everything through the controller that's there. And when we talk about the procedures that Intuitive Surgery can do, these are the sort of things that they can do. So things like bariatric surgery, so patients that are really obese, trimming off some of the extra fat and part of the stomach to make things smaller and help them lose weight and produce something called a gastric sleeve. This is something that is probably going to decrease over time because of advancements in medication such as the GLP from Eli Lilly and Novo Nordisk, but this option is still there for select amount of patients. There's also a role in cardiac surgery, colorectal surgery, general surgery, hernia repair, gynecological surgeries, so things like hysterectomies, head and neck surgeries for people with cancer or other conditions related to the head and neck, and lung biopsies, and chest surgeries, and urological surgeries as well. So these are all examples of surgeries that these devices can do, and you could see they're very broad, and most of these surgeries are done using the Da Vinci device, which is their flagship device. However, one of them, the lung biopsy, that's done by the other device that they have, which is the Ion device. This is something very new. This was released in 2019, and this is there for minimally invasive lung biopsy. So someone who is suspecting lung cancer this device is essentially like a flexible snake controlled with a remote going into your lungs and taking samples from wherever they want to take samples, and then that's taken to the lab to analyze and see whether the patient actually has cancer or not. This page talks much more about the Ion devices and also has videos, how it works, etc. So feel free to go through this if you're really curious about it. The other thing that Intuitive offer is the Hub, and the Hub is really good because this essentially connects with the Da Vinci device or the Ion device, and it allows recording to be done. For example, if something is seen during surgery, or if a pathology is found, or whatever they're operating on, if they want to document it, then they can capture a video automatically. It's secure and there's storage available, and if needed to be shared with other surgeons, for example if there's another surgeon in another state, then it can easily be discussed with them through their Intuitive accounts. You can also collaborate with other surgeons using the Da Vinci devices. So if I'm doing a surgery, for example, and I'm not sure what to do for the next step because this patient is very complex, then I can easily contact another doctor of my choice through this device, and they could see exactly where I am in the surgery, what I'm doing, and they could guide me further in terms of what to do. So things like this is very innovative and it's very useful to have in the surgical world. Let's talk about the fundamentals of Intuitive Surgical. Intuitive Surgical currently controls over 70% of the robotic surgery field. It's a monopoly in its field, and the reasons why is because they just offer so much and they've been around for so long. Let's take Da Vinci 5 as an example. For some reason this page is not loading properly, but the sort of things that the Da Vinci 5 can do is they can enhance surgical senses. So for example, whilst doing surgery, it can give you haptic feedback, so you know if you're approaching something or if you're going too far into something. It's almost like having a games console, a PlayStation, where if you're doing a certain action, then the controller will stop vibrating. So it's a very similar thing to that. So Da Vinci can also help create real imaging, and what I mean by this is it can use AI to predict where things are. So when you're actually going in with the camera, you'll be able to see exactly what's visible to the camera, but structures behind that, it can predict what is behind that, and it can create images, and it can also help guide you in which directions you need to go as well. This is one of the flagship features of Da Vinci 5. It's also meant to be quite efficient as well, in the sense that the whole tower of the Da Vinci 5, everything you need for the surgery is in there, and you don't need to be faffing around having like lots of different equipment and putting things into different places, etc. Everything's there as you need it, and this allows more time efficiency, and so more surgeries can be done in the day compared to any other method of doing the surgery. Other features of the Da Vinci device is that it can do machine learning, so it can learn how different surgeons do specific surgeries. So for example, if Da Vinci 5 knew my style of surgery, then when I next do the surgery, it can tailor that and guide me in which directions I need to do if it's my own style, and it will just learn how different surgeons do different surgeries, and it essentially makes a network effect. Other things that the Da Vinci 5 can do is it has a built-in insufflator, and what that means is when doing these minimally invasive surgeries, the abdomen essentially needs to be pumped with a lot of air, so it allows the cameras to go in and visualize the area, and this is usually done manually, but with the Da Vinci 5 this is done as part of the actual surgery, where it's just done automatically. You just set what pressure you want inside the cavity and it will get it to that pressure and it will maintain it at that pressure as well. So it's very easy for surgeons to use. And the final thing I wanted to mention is the smoke evacuation as well. When using certain equipment such as bipolar, this actually burns structures. So for example, if you need to cut through a few different layers or if you need to stop some bleeding, then something like a bipolar is usually used, where it essentially burns it so it stops bleeding, or it burns through the tissue so that you can get through and carry on with the surgery. When doing that, it usually creates some smoke in the actual area that you're operating on. Usually how this is tackled is a suction device is used, where you have to manually put that in and suction off all the smoke so that the surgeon can see exactly what they're doing. But with the Da Vinci device, it has that built in, where whilst you're doing the surgery, it'll automatically suction out the smoke. Nothing manually needs to be done, so it makes things much more easier for the surgeon. Continuing with the fundamental side of things, since 2012 we could see how many Da Vinci devices have been installed worldwide. From 2012 to about 2020, the actual amount of Da Vinci devices increased from about 2,500 to about 6,000 devices. So we're talking about just over more than double in terms of devices installed in the space of 8 years. However, when we look at 2020 to 2024, it went from just under 6,000 to almost 10,000. So again, almost double. This time it was only in the space of 4 years. So we could see that the actual amount of Da Vinci devices have been increasing every single year. It's a straight trend up. And in terms of the number of procedures performed, in 2020, 1.2 million procedures were performed using Da Vinci devices, and today 2.7 million procedures are being performed by Da Vinci devices. So we're talking more than double the number of procedures in the space of 4 years. From this we could see that robotic surgery is increasing worldwide. So aside from the Vinci devices, if we now look at the Ion devices, remember Ion is the device that does the biopsies for lung cancer. Because this is fairly new, since 2019, there's not any data before that. So in December 2019, there was only 10 devices out there for this Ion device. This has steadily increased, and today there's 271 devices for the Ion device worldwide. So even now you could see that there's not that many devices out there. And when we look at the actual number of procedures being performed, there's no data before 2021, but 2021 there were 7,400 procedures being done by this device, and today there's almost 100,000 procedures being done by this device. So this is increasing rapidly, and I think not many people are talking about the Ion devices, but if you look at the facts, lung cancer is the leading cause of cancer deaths around the world. So not just the US, not just the UK, but worldwide. That makes up about 18% of all cancer deaths. With lung cancer being so prominent and such a big killer, this Ion device has the potential to change the game around the world. I expect the procedures for Ion devices to increase every single year. As more data comes out, such as the Ion devices picking up cancers much earlier than any other traditional methods, then things like that will cause more hospitals to buy these devices, and it will only increase their use and benefit Intuitive Surgical the most. Now you might be thinking that, okay, it's all well and good, they got these devices which are increasing every year, but at some point all of these hospitals that have these devices, and then what then? Their revenue is not going to really increase much more than from then. But the good thing about this company is even if the amount of units that they actually sell stops from here, it doesn't matter too much, they'll still make revenue. And the reason being is because they have recurring revenue. These robotic devices, they're going to need new instruments after each surgery that's done. They're not going to reuse the same things, they're not going to reuse the same scalpel or anything like that. They're gonna need to keep buying these equipments for the actual machines. And you could see over here that every single year the actual amount of equipment that they're selling for these equipments is just increasing year on year. And even on top of that, the Vinci device, the Ion device, they're gonna need regular servicing. And if we take that into account and we look at the total recurring revenue, so this includes the servicing, this includes the medical supplies, etc. Every single year they're making a lot of money from this. And if we look at this chart, it's even more clear. In blue we've got the actual amount of revenue they make from the products. So for example, selling the actual Da Vinci device itself, selling the actual Ion device itself, and in yellow you've got the services revenue, so the revenue coming from the actual medical supplies, you've got the servicing, etc. And every single year that's increasing. You could see how the yellow is increasing every single year, and so is the blue, and that's really good to see. Let's talk about the financials of the company. So Intuitive Surgical, it has a market cap of $176 billion. It's a very, very big company, and the amount of revenue they made last year was just over $8 billion. You might be thinking here that, you know, this company only makes $8 billion, but they have a market cap of $176 billion. I agree with that thought that it is very overpriced at the moment, where you have a PE ratio of 76, you have an enterprise value to sales ratio of 20. It's really high. However, on its own, it means nothing. When looking at these numbers, I agree, it's high. We need to compare this to where it has been in the past, and we'll do that later in this video. They have gross profit margins of 67% with EBITDA margins of 33%, which is really good. Their net profit margin is 27%. Again, really, really good. They've grown their revenue over 13% every year for the last 5 years, and they predicted to grow their revenue further 15% over the next couple of years as well. So this is really good. The numbers look really good. It just seems overpriced based on these metrics over here. Here is a chart of their revenues every year, which has been increasing, and you've got their net profit margin over here as well. There's not really a trend to the net profit margin. The latest one is 27.8%, but a couple of years ago it's 21%, and then a few years before that it was 30%. So there's not really a trend, it's up and down. But the main thing that I'm seeing here is their average net profit margin is about 25%, which is really good to see. I would like to see more of an uptrend in this though. I want to see that this company is getting more efficient, but at present I don't see that. So it's just something to be aware of. We mentioned the EV to sales ratio of 20%, which seems very expensive, and having a look at it historically, even now it does seem expensive. At its peak we were talking about an EV to sales ratio of about 25, but now we're trading at 20, but it has been as low as 10 in the past. If I now add an average to this, the average is 14, and we're currently trading much higher than that. And if I was to just narrow it down from 2020 onwards, the average is 17, and currently we're at 20. So this company is overvalued in this metric if we look at it, but let's look at a few other metrics. The next metric we'll look at is the forward PE. The average forward PE PE ratio of this company is 56. You could see that over here. And currently we're at 61, which again is very high. In the recent drop, it did go down to about the average of over the last 4 years. And if I was to extend this out, we're still quite far away from the average. The next metric we're looking at is the price to operating cash flow. And this is since 2020. And again, we're trading above the average. Next up is the price to free cash flow. We're currently trading in line with the last 5 years, but slightly on the higher side. And looking at the free cash flow per share, there's not really a trend. It's pretty flat. It's been going up and it's been going down, and now it's starting to go back up. If we look at the total shares outstanding, again, this is flat as well. So they're not buying back their own shares, but they're not selling their shares as well. And if we look at their EBITDA margins, again, there's no trend. It's pretty flat. We're talking 33% right now, and the average is somewhere in the 30s. If we look at their stock-based compensation, we could see that they are increasing their stock-based compensation, which is not a good sign to see. But if we compare this to the revenue, it is decreasing compared to the last couple of years. So stock-based compensation makes up just under 10% of its revenue. The other thing I wanted to mention with these sort of companies is because it's in the healthcare space and it's rapidly evolving all the time, we could see this company, they're spending a lot in research and development. Just in the last year, they spent $1.1 billion in research and development. So every single year it's increasing. The main thing we want to see with this is, are they actually doing anything with this? Are they increasing their pipeline? Are they increasing what they are actually producing? Because some companies, they increase their research and development cost, but they're not really doing anything. They're not creating any new drugs. They're not creating any new devices. But with ISRG, despite this increasing, recently they came out with a lot of new features on the Vinci 5, and that's usually a good sign to see that they are actually producing things from the research that they do. And despite this metric increasing every single year, when we compare it to its revenue, last year's research and development cost only made up 13% of its revenue, which is still high, but compared to where it has been in the last few years, is getting lower. So that's a good thing, because it means that the company, although is spending more in research and development, which we've seen over here, they're also making more money as well. Now we'll talk about the technicals of ISRG. Looking at the chart of ISRG since 2017, pretty much been in an uptrend. We're currently trading at $500 and we're currently below the bull market support band. So the bull market support band is a combination of the 20-week moving average and the 21-week EMA. And if you don't know what these moving averages are, I suggest you watch my video by clicking the link above. Although it's trading below this moving average, we could say that the S&P 500 is also trading below this. So it's not a bad thing that the ISRG is below this moving average if the S&P 500 is exactly the same as well. The next question I want to ask when looking at the charts is it a bleeder? And what I mean by that is, how is it performing compared to the S&P 500? Is it outperforming? Is it underperforming the S&P 500? And that's exactly what we'll check now. And we could see from this chart, this is a chart of ISRG divided by the S&P 500, and we could see that currently we're at the bull market support band and the trend is up. So this to me means that the ISRG has been outperforming the S&P 500 at least since 2022, and to be honest, even before that, because the overall trend, the direction is this way. Let's talk about some of the risk with ISRG. The first risk is the cost, and I say it's a risk, but in all honesty it just shows how much of a wide moat ISRG has. Each device is very expensive. Take the Vinci 5 as an example. It usually costs between $2 and $2.5 million. It's really expensive, and that's just the device itself. That doesn't take into account anything else. Each surgery that is done using this device, the equipment that needs to be replaced costs between $600 to $3,500 per case. That's another expense. And the annual service for this device is almost $200,000, and training the surgeon into how to actually use these devices is about $6,000. We could see that using robotic surgery is not cheap at all, and using Da Vinci is very expensive. That's the first risk to this company. With things being this expensive, how sustainable is it for this to be afforded to many hospitals, etc.? The second risk I see with ISRG is the competition. There's a few other competing companies. The main two are Medtronic and J&J. Medtronic, they have their own Hugo devices, and J&J has their own Ottava devices which compete with Da Vinci, and then they have a Monarch device which competes with the Ion device that Intuitive has. The only thing I'd say with the competition is at the moment ISRG controls over 70% of the market share. So out of all of the devices for robotic surgeries being sold worldwide, ISRG makes up 70%. The other thing is, if hospitals already have these Da Vinci devices, because these things, they're expensive, so once they have this, how likely are they to change, because they have to change the actual device itself, they have to retrain the staff, sort out the maintenance, the disposables, and much more. It's a very big hassle for them to change over to other devices. And the other thing with the training side of things is most of these surgeons that are trained in robotic surgery is mainly done on the Da Vinci devices, it's mainly done on the intuitive devices. So the surgeons, they'll have to go through in-depth training to learn some of these other devices if they were to use that. And with the network effect that Da Vinci has with being able to contact other surgeons using the Da Vinci devices, etc., is just the moat that ISRG has, which makes me think that ISRG will be around for a long time. And if we were to compare the performances of ISRG to some of its competitors, so Medtronic, J&J, and I've just put in S&P 500 here just for comparison. Year to date, Intuitive is down 5%, whereas the others are up, and the S&P 500 is down. If I look at the 1 year performance, there's a clear winner here, it's Intuitive. And if we look at the last 5 years, again there's a clear winner. And if we look at the full from inception, again there's a clear winner here. So for me, investing in some of its competitors such as Medtronic or J&J, it doesn't really make sense to me at the moment. The other risk is tariffs. I know there's a lot going on with tariffs around the world, Donald Trump changing things every single day, but this sentence from the last earnings says exactly that. So their gross margins, they're expecting it to decrease to about 67 to 68% this year compared to 69% that it was last year, and this does not include any potential impact of new tariffs on the business. That's another risk to be aware of with this company. And the final risk I wanted to mention is, anecdotally speaking, when speaking to some of the other surgeons, there's a very split opinion in terms of robotic surgery as a whole rather than just intuitive. And what I mean by that is some surgeons, they're very against robotic surgery. They say that no, they prefer doing it themselves, they prefer being the person doing it, and they feel it's done better by themselves rather than by a robot. Whereas other surgeons, they feel that robotic surgery is the next big thing. This difference of opinion might be a problem for Intuitive, because you may have a group of surgeons that really want some of these Da Vinci devices in their hospital, but that move is being blocked off by some of these surgeons that don't want Da Vinci devices or don't want robotic surgery at all. So that's something to be aware of. But saying that, nowadays having these Da Vinci devices is more of a way for these hospitals to show off and get more patients, because they advertise that we've got robotic surgery, we've got Da Vinci devices, it's revolutionary, it's much better outcomes. That's the way it's advertised. And as a patient, if I was to choose, do I get my surgery done by this really skilled surgeon, or do I get my surgery done by another very skilled surgeon, but they boasting about this device that they're using, the Da Vinci device is so good, there's so much good evidence behind it, I'm going to get less blood loss, I'm going to get less complications, etc. Do I use that instead? And as a patient, the way it's advertised, I'd probably go with the robotic surgery. So that's just something to be aware of. Let's talk about going forwards. In the last earnings call, the company expects Da Vinci procedures to increase approximately 13 to 16% this year compared to last year. And they expect their gross profits to be slightly lower than last year, and this does not include tariffs, as I mentioned, and they expect to increase their operating expenses to 10 to 15% compared to 10% last year. So overall, the financial outlook going forward is good. And if we look at some of these estimates, the end of 2025, they're expecting their revenues to grow 17%, and then 2026, 15%, and 2027, 14%. So there's a lot of growth there. And when we look at the earnings per share, at the end of 2025, they're expecting to grow 16%. They're expecting to grow the year after 17%, and the year after 16%. And if we look at some of the price targets by analysts, there's a very broad range. By the end of this year and the start of next year, they expect the absolute low of this stock to go to just under $400, but the upside, they're expecting about $652. But the average consensus is just under $600, and currently we're trading at $500. So if it was to go to the average consensus, then we're talking about a 20% increase from here. Finally, I just wanted to finish off this video by just showing the Morningstar report for ISRG, and they currently rate it as a 2-star, mainly because of price at the moment, and they give ISRG a wide economic moat, and they say it's stable. And their fair value for ISRG is $350, and currently we're trading close to about $500. And you've got the bull case here and you've got the bear case here, and if you wanted to read that, just pause this video. But I just want to finish off by giving my opinion. My opinion on ISRG is this is a very solid company, and I feel that there's a lot of growth for this company in the future. Robotic surgery is going to increase, and the ion devices, I feel, is going to increase. The use of it is going to increase exponentially as well at some point. Lung cancer is the biggest cause of cancer death in the world. Using these devices to potentially pick it up earlier will be a really big catalyst for this company to go to its next level. Saying all of that, is trading at very expensive price to free cash flow ratios, very high PE, very high EV to sales ratio, and in general just very high valuations. And I feel that this company, for me to buy a big position in, it does need to come down quite a lot. And if we look at some of the drawdowns it has had in the past, the drawdown it's had recently was about a 26% decline, but in the past it has gone down much lower. So it's been down 29% in the past, 38%, and the most it's been in the last 5 years or so is about 50%. If this does go down to close to Morningstar's fair valuation of about $350, I'd be much more comfortable investing bigger amounts into this company. However, that doesn't mean I'm sitting out of this company. I really do want to be invested in this company. So what I'm currently doing is I'm just doing a dollar cost average. Every time this stock dips below the 50-week moving average, I'll just add £50 a week to it. So it's dipped about here. I've been dollar cost averaging every week into Intuitive Surgical whilst it was above this. However, now it's increased, it's gone above the moving average, so I've stopped dollar cost averaging into this stock. I'm going to continue this plan, and if it was to keep coming down and maybe even tag the 200-week moving average, which ironically is about $350, which is the Morningstar fair valuation, then I'm much happier to buy a bigger amount in this stock, because I do believe in this for the long term. It's a really good stock and it has been outperforming the S&P 500, so it's a stock that I'm paying very close attention to. I hope you found this video useful, and if you want more videos, please like, subscribe and comment below what you want to see. Thank you for watching.